Hi, I'm Kristen. I'm a certified financial planner and founder of the financial planning firm Brooklyn Plans. I'm really excited today to present you with a very important topic. This is a Financial Literacy Month exclusive, financial wellness tips for uncertain times. Today's topic is saving for your future now and in times of crisis. And this content is sponsored by DailyPay. They are a payment experience company that helps employees control the timing of their pay, monitor earnings, and build up savings. Check them out at dailypay.com. Right now they're offering free next day transfers to their users. So savings is always something that is important and relevant, and especially now, given that there have been so many changes, there may be the question, how can we take advantage of some things that we're experiencing and save? Now, this might be a thorny question for some people who have lost significant income or are in a tighter spot. Saving may not be a reality right now, and I just want to address that and put that out there in case you're wondering, what is she talking about? And I want to acknowledge that there are a lot of households that are in situations that are allowing for saving right now, and how we might take advantage of that fortunate position that you're in so that you can come out ahead. And if you're not in that position, we're going to talk about some other tips and things that you can do going forward. So how could you be saving right now? Some people are on unemployment, and because unemployment has been expanded to have $600 more per week than it traditionally has at the state level, there might be an opportunity to even save on unemployment. There might be. In the past, unemployment was very bare bones and difficult to save on, but given that it's much higher than it traditionally is, and combined with some other things that we'll be talking about, even if you're on unemployment, you might be in a position to save some of your money. So let's get to what else might put you in a position to save some money. And I'll say before we get into costs, in addition to unemployment, some people who are still working, getting some kind of bonuses or overtime pay for their work because of the challenging time that they're in. So some people are in a position where they might even be earning more income than usual. So reduced costs, we're seeing, and in my conversations with clients, I know that this is true, a lot less of these variable costs, meaning things that are not bills or fixed payments. So things like eating out, going to the movies, entertainment, concerts, right? These aren't happening. So a lot of people are experiencing a lot more cash flow and a surplus in areas where they might have been big spenders before. Shopping, obviously, you can online shop, but if you're the type of person that likes to go out in person and pick up a few things, that's not available to a lot of people right now. So I'm seeing and hearing about people really not spending money outside of the essentials. In addition to that, there have been a lot of suspended payments on the fixed side. So things that are our bills and our regular expected monthly costs. So things like student loan payments and mortgages, you might qualify for suspensions on those. If you want to know more about that, check out our video explainers that we did previously. We did one entirely on the student loan interest and payment freeze. If you have federal direct loans, you don't have to pay those through September. So you might have extra money available that was going to a student loan. Some of those payments are quite substantial. In addition to that, there is the opportunity for mortgage relief. So if that's something that you qualify for or wonder if you qualify for, check out our video explainer on payment relief where we go over options for housing. So you might have some normal size, really large bills in normal times that are not being paid right now, and that might lead to a surplus for you. Other suspended payments are things like gym memberships, daycares, service providers that can charge quite a lot in a regular monthly budget that are not able to provide the service, are generally not charging their customers right now, or in some cases they're not. So if this is you, you may also have other types of bills that you're not needing to pay in this situation. And if you are in the fortunate position where your income has held up, or you qualify for enough unemployment to meet your needs and then some, you would have a little bit of a surplus that you could actually use to be saving right now. So if that's you, how and what should you be saving? So I am a big fan of high yield savings accounts. There are many different options for these. They're usually online accounts, and you would still keep your existing checking or banking relationship, but you could add to it a high yield savings account that is an online based account and often will offer much higher yields for your savings than you'll find in a big bank. So these are common ones are Ally. A lot of people have gotten into this field lately. So you see Marcus by Goldman Sachs, Amex, American Express has a high yield savings, Discover. I'm a big fan of Ally. They've been around a long time, and I've seen their interest rates be competitive in lots of different environments. They tend to stay above the pack, but there's also lots of good options out there. Ally, if you want to check them out, is ALLY. High yield savings accounts will allow your savings to grow over time while it's parked. Instead of earning next to nothing, you can earn a little something. Interest rates aren't super high, but you'll get a little something more than you'll see at a big bank savings account. And then if you do have some extra cash flow, let's think about priorities and how you would allocate that. So number one would be groceries. That's covering your basics and making sure that you're taken care of and that you and your family have enough to at least get through 2 weeks, have a stocked pantry. That will give you some comfort. That's a good place to start and will reduce the need to go out during this time. And next would be your bills that are not suspended. So we talked about some examples of things that might be suspended. And for more examples of those, check out our video explainer on payment relief, where we go through a lot of different types of payments and how you might get relief for those right now if you're having trouble making them. But those that you don't have relief for, you'd want to pay. And rent is obviously a big one. If you're, we'd want to make sure that's covered before we would think about going towards savings. Then, if you have some surplus, we would look at saving some, or another option, or you could do both of these, would be high interest debt. So credit cards have a very high interest rate, generally speaking, oftentimes in the 20% range. So it's charging you a lot more than you're going to earn for having your money in savings. So it is a way of saving, if you think about it like that, to pay it off. And this would be a good time to do that if you'd have other payments that are not coming out of your account that usually would. And retirement savings is another available choice here. And we're in a unique situation where tax returns, the filing deadline has been extended to July 15th. So usually you have to make a contribution to a retirement account if it's outside of an employer retirement account through an IRA or an individual retirement account. You usually have until April 15th to make a qualifying contribution for the previous tax year. So in normal times, you would have had till April 15th of 2020 to contribute for 2019. However, since the deadline has been moved to July to file your taxes, guess what else moved to July? The deadline to contribute to an IRA. So if an IRA makes sense for you and you'd want to do a little more research here, because we don't have time to get into all the details in this video, because there's a lot of different things to consider when contributing to an IRA to make sure that it's the right choice for you and that your contribution will get the tax benefit it's intended to. But if that's something that made sense for you anyway, or could make sense for you, you have until July to do it. So you have essentially halfway through this year to kind of go back in time and save for retirement last year. So that is an unusual situation that we could take advantage of. And for most people, a retirement contribution to an IRA, if you qualify for the full contribution that would have the tax benefit, would be up to $6,000 you could put into that account. So you'll have to do a little more homework and talking to folks like your trusted tax people to see if that is a situation that makes sense for you. But if it does, you have more time to do it, and that could be a really good use of extra savings that might not normally be available for retirement. All right, so let's do some frequently asked questions around saving during these times. Question 1, what if I can't save right now? Totally understandable. And I hope that you can still get something out of this content, because a lot of these These tips that we're going to go over next in pro tips are kind of evergreen in the sense that they are always good strategies for saving. And if you can't right now, I'm sure you're not alone. And I hope that you can hang in there, find other ways to get relief for the payments that you do have, and then put this in your back pocket for another day when you're in a position to, and bookmark it, and then you can watch it again and hopefully use some of these strategies at that time. Question number 2, is now a good time to start investing my savings? So you may be hearing a lot about the markets in the news, and recently there was a huge downturn in the stock market. So that brings up the question, is now a good time to get in? And my answer to that is that the good time to invest depends on you and not external market circumstances. So if it didn't make sense to invest for you before, it doesn't make any more sense now because there's been a market downturn. If it made sense for you to invest before, then it still makes sense for you to invest now, and you're in a little bit of a better position than you would have been, say, at the beginning of the year because of the direction markets have gone. They've been coming back up again. I don't know by the time you're watching this video where they'll be. I don't have a crystal ball, and anyone who says they do is not being truthful. But it really depends on what your goals are, and if it makes sense for you to be invested for the long term, then you shouldn't wait to get started. And because of the market downturn that we've experienced, you could imagine that stocks are discounted from where they were at the beginning of the year. So I think about it kind of like shopping. If you needed a new pair of shoes and you knew you needed a certain pair, then they went on sale, then it may have still been appropriate before, but now it's just a better deal. That's kind of how I think of it with investing right now. So if you've been on the sidelines, it made sense for you to invest, you wanted to get started, then my advice today is the same as any day, which is get started. But you're in luck because things are on sale. And frequently asked question number 3, is now a good time to save to buy a home? Kind of similar to my answer on stocks, in the sense that if it made sense for you to buy a home or save to buy a home before, it could be in your advantage to do it now because we may see some drops in prices at the real estate level. I wouldn't be surprised, although you never know how these things are going to go and what ripple effects they may have. I think it could be a good time to save for other long-term goals, simply because if you are in the position of having these payments suspended and having less outflow due to entertainment and eating out being unavailable, then you might be in a better position to save in general, and putting some of that towards a goal of yours, which may be to buy a home, makes a lot of sense. Let's go to pro tips. So these are the basics about some things you can do, and let's get into the financial planning part of it. So pro tip number 1, I'm a big fan of automation. So is DailyPay, it turns out. They allow you to save automatically a part of your pay each time you get paid, which is cool because it kind of takes the legwork out of it for you. I work with my clients a lot of times to set up automatic savings through what I talked about before, the high-yield savings accounts. Because those are online banks, they have to be linked up to your brick and mortar bank. And most of them have very easy tools that you can use and set up an automatic savings. So you can time it so that every time you get paid, you're having an automation working in the background that's moving a certain amount into your savings account. And when we talk about savings accounts, the number 1 account that we'd want to have, in case you don't have it already, and automate to saving towards, would be the emergency fund. And it's something that I talk about a lot, and right now we can all see how important it is to have a few months runway if possible. So making savings automatic will take the onus off of the individual to save every time that you get paid, and it will make it a default that you are going to save because you have essentially programmed a robot to save for you, which turns out works a lot better than having humans handle their own savings, because we will always find things that we want to spend our money on. My second tip, and I tell this to people a lot is start small. So ideally, yes, you would be in a position to save about 20% of your pay. Reality check, is everybody there? No. Are a lot of people there? Not necessarily. That is something you want to strive towards. That's a goal. But if that's not realistic for you today, then you want to start somewhere. You want to start somewhere small. It could be $50 a month that you begin saving regularly and work up to having a $500 emergency fund or 1 month's rent before you go to that bigger goal of having 3 to 6 months of your expenses saved. And pro tip number 3, I love this one. If you were paying things before, say student loan, say daycare or gym, and those payments have been suspended, keep making those payments, but to your savings account, right? Or if you tended to go out to lunch every day for work and you're working from home, then transfer that amount to a savings account as though it were still an expense. That way, instead of making the payments to other people's pockets, because that's essentially what you're doing, right? If you eat out, it's some other restaurant owner who gets that money. If you make a student loan, it could be the federal government that ends up with that money. And you switch that so that you're paying a bill to yourself and the money ends up in your own pocket. And you won't even feel the difference, which is the beautiful thing, because you've seen that money come out of your checking every month. Prior to this time, you might as well keep having it coming out, but going to a high yield savings account. Thank you so much for tuning in. I hope this gives you some ideas of ways that you could use this time to save and get ahead. I know it's full of challenges, and hopefully this has helped to illuminate how saving doesn't have to be one of them. So thank you again for joining me. I'm Kristen. I'm a certified financial planner, founder of the financial planning firm Brooklyn Plans. Check it out at brooklynplans.org. This content was sponsored by DailyPay. You can check them out at dailypay.com. Tune in next time. Every week in April, we've been doing 1 or 2 videos on financial wellness tips to help you and your family navigate these uncertain times. We have 1 more coming out on unemployment benefits, everything you need to know. And all of the previous videos that we've done are available at dailypay.com in their resources section. Thank you. Take care. Be well.